Maverick traders, welcome out to your market roundup. It's October 6th. Corey here with you. We're going to go through meaningful news. We're going to talk about what's moving and why it's moving, and we're going to highlight our very best trade ideas.
All trades and analysis in this video are for professional traders only. This video has been released to the public after a delay required by our compliance department. Maverick traders receive this market recap immediately, along with real-time trading support and resources. Maverick Trading is a proprietary trading firm that backs professional stock and options traders with firm capital. Our traders keep 70 to 80% of the profits they generate. If you're ready to become a professional trader, click the apply link in the video description below. Let's break down what happened in the markets today.
So the march forward continues. There's, always worry about the markets melting down, but did you know that the markets can melt up? And that's what we've been talking about. So Dow slightly lower. I'd call it a sideways day for the Dow. S&P slightly higher at 0.3%. NASDAQ up 0.7. QQQ being a leadership area. The NASDAQ, certainly AI-related stocks have been the leadership group. IWM, which represents the Russell 2000, up 0.4%. Oil and gold continue. Gold has been on an absolute tear. Oil up 1.6, gold just shy of 2%. Are tariffs in jeopardy? So we know courts have ruled that tariffs use powers beyond what the law allows, and that in November the Supreme Courts are going to rule on this. We saw the market sell off a little bit when this news first came out, and the appellate's court, which basically was the first one to rule that this was not allowed, that order has been stayed until mid-October. But the Supreme Court doesn't rule until November, and we'll see where we go with this. Certainly to have to reverse those, send all that money, that would be a big thing if that were to occur. Advanced decline line, 50-50, half of stocks going up, half going down. 50-period moving average continues to be slightly bullish, with the majority of stocks still trending upward, just shy of 60% of them. Now, as we look at the S&P chart, you can still see this melt up is just kind of continuing, right? We had a little check back to the moving average, and away we go to the upside. I think the idea that the markets would kind of fail in a whimper seems less likely than going out with a bang. So can things go vertical? Can you get more of a shape that's sort of a parabolic curve, where as we look at it over time, it's like, wow, this thing went absolutely vertical? I think that's reasonable. I think that's almost anticipated by me for the past number of weeks. I do these on Mondays, and I've just had the same message. I think we're in that exhaustion run higher, and we've been doing just that for weeks now. So you'll probably get a parabolic curvature to this finish, which means that there really should be a violent burst to the upside. In order for that to occur, you do really need a broadening out of the rally. If you look at the NASDAQ, for example, this is where all the leadership stocks are. This is where, if you think about the biggest names, Apple and Google and Amazon and Nvidia and these big chip names and so on, they're all in the NASDAQ. Well, that's great. This area of the market has been very strong. But if we're going to go violently higher, then you need the underperformers to start to really catch a bid, and you need these outperformers to just continue to do what they're doing, and then you'll see that big melt up, which I would say is more likely than not. Well, look at today, price action wise, Tesla up huge. AMD was in the news, up 23%. This is a massive business, and for it to be up tens of billions of dollars in market cap simply because they signed an agreement with OpenAI, ChatGPT, to do some business together, it tells you this is really just driven by AI. That's the driving force. Telecom was especially red. If you're looking at the reddest area of the market, that is bright red. AT&T, Verizon, T-Mobile, all of them sharply lower in that segment of the market. So let's look at a few charts here. We've got 8 or so names on the bullish and bearish list. I'm going to start with FedEx. FedEx has broken out to the upside. If you look at the resistance levels, we are just clearing them now. Now, we didn't really get the big burst in volume. It certainly accelerated a little. I wouldn't be shocked if we get a little bit of a base here, maybe a high base pattern, and then move to the upside. So FedEx still looks strong, still looks like it wants to challenge higher prices. I'd love to see a chart in FedEx that's similar to what I'm seeing here in Union Pacific. Notice the high base after a nice breakout that happened back here at lower levels, high base. So if I have to buy one of these tomorrow, it's certainly UNP. If I'm looking for something to consolidate and then trade a little bit later on, it's probably FedEx, but I think UNP is more actionable right here, right now. But just a prime example of some of these sectors that had been underperforming starting to catch a bid just recently, starting to move into an upward trend. And this is where I would look back to some of these lagging sectors. Right here, right now is kind of a good entry point for something like a Union Pacific. And then on the bearish side, well, if they can't perform in this market where it's been strong, it speaks volumes for maybe how bad the business is and just where that stock is headed over time. Alaska Air, you can see, continues to deteriorate, sort of a low basing formation happening here. Lower prices seem likely. ALK on the downside. Starwood Properties, another one, recently broke support on volume, big gap, consolidated for a few days, and further breaking down. Out of those two, I like Starwood for the immediate trade. So if I'm looking for something right away, it'd probably be STWD. But I like to give some variety. Hey, this could set up really nicely if it does this. I call it painting a picture. Paint a picture of what you want to see and then see if it's kind of playing out as anticipated. That'll give you some confidence that you're seeing the chart clearly, that it's acting properly for your bullish bearish trade, and that you can act upon that. So on the market outlook, look, we've had this same messaging. I've been expecting markets trending upward, creating this big burst to the upside. We're doing that. We're continuing to create that exhaustive upside move, that melt up, so to speak. We've got non-farm payrolls out on Friday. Earnings season officially just about to begin. So right at the end of this week is sort of the start of earnings. You've got Delta Airlines, Pepsi. Next week, it really kicks off. You've got some banks reporting earnings. We'll get into tech names a week or so after that. So we're really going into earnings the very end of this week, and then it really, really kicks off next week, that earnings cycle. So hope you enjoyed today's market roundup. Have a great week, everyone. We'll see you next time.